Hello, everyone, and welcome into our weekly webinar. Before I get started, I have to read a quick disclaimer for you, as we do every week. Route Consultant is not endorsed by and is not recommended by Federal Express Corporation, FedEx Ground, or Amazon. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation, FedEx Ground, or Amazon. So now that we've got that out of the way, excited to have you all in here with us today. My name is Danny Robinson. I'm one of the regional sales directors here in office, and pretty soon we're going to bring on Josh Greggory, our director of consulting and training, to discuss some exciting things that are happening in the FedEx world with scale limitations and how those are going to really be affecting the market. But before we do that, we just wanted to touch base on a couple of different things that have been going on as far as some new listings, and of course, some of the exciting events that we have coming up in the near future. First and foremost, we have a new investor summit that's going to be coming up this Monday and Tuesday, the 12th and 13th of June. That is going to be something that we have a couple of seats left for, so we'd love to have you guys in there. Love to host you for that. If you want to be a part of that, please go to our website and register. Also, let's not forget that we have our expo coming up at the end of July. This is something that we're super excited about. Kevin O'Leary is going to be the keynote speaker for that event. We have a lot of great content that we're going to be revealing, a lot of fun times to have, a great time to connect and network with your fellow contractors. And of course, this is the first year where we're actually going to be inviting some non-contractors, some new investors who are looking to be buyers in the space into the expo. So everyone, feel free to go to the website, register for that, take advantage of the room blocks that we have available there. We have some really, really great deals on those, and we'd love to host you there. So with that being said, there is a tradition that we have here in our weekly webinar where if you want to ask us a question, you have to first answer one. So we'll be utilizing the Q&A tab at the bottom of the screen there. Try not to put your questions into the chat box, but rather into the Q&A so that we can keep those organized and make sure that we are addressing everything. Beyond that, you should know that the question of the week this week is, what is your favorite kind of ice cream? As things heat up here in the South, it seemed like an appropriate question to be asking. So we will absolutely take advantage of that. And I'm excited to see what your answers are there. So before we bring Josh on, we wanted to first go over a couple of different things, a couple of new offerings that we have business listing wise here. So give me a second, let me get that pulled up and we will absolutely get those in front of you. First, we have a P&D business out of North Georgia. 8 P&D routes being offered at $995,000, running great margins around 22% of EBITDA there. There is a manager on staff, a fully leased fleet that's going to help you guys manage that variable cost of repair and maintenance. The lease costs are fixed into the prospectus. So if you have something that you guys would be interested in, please go ahead and reach out to us. We'd love to get that in front of you. And any of the other listings, just reach out to your broker, your consultant, whoever you're working with, and we'd love to get those details in front of you guys. So we will go ahead now. We'll bring in Josh Greggory to start talking about some of the great things that are happening with the relaxing of scale limitations in the FedEx Ground space. And with no further ado, I'll let him dive into what he's got to tell you guys. All right, take it away, Josh.
Perfect. Thanks, Danny. Again, welcome. It's good to see you guys all here today. It's always exciting when I get to be introduced. You know, a lot of times I feel like I have to do the intros on here. So it's great to be kind of on the other side of that and come in at the end. So good to see you all. As Danny said at the beginning, my name is Josh Greggory. If we've never met before, I lead our consulting and training teams here. And what I wanted to talk about today, as Danny kind of alluded to already, is some new realities around how scale is changing, particularly on the P&D side. And there's just a couple of things that I want everyone to, one, be aware of and hear if you haven't heard yet, and understand how things are changing and the best way that you can position yourself moving forward. And particularly current contractors who are going to be seeing this very soon, or may have already started to encounter some of the effects of this. I wanted to make sure we make you all aware and talk about it today and answer any questions you may have. So let me just start because some of you on this webinar may have never heard the term scale before, don't know what I'm talking about. So let me start by just going over quickly what I mean when I say scale. So really, scale refers to kind of two things here. The first is basically a FedEx imposed limit. So at the terminal level, they will tell you that they don't want you to be any larger than a certain percentage of that terminal. Basically, the limit at that level is all about a risk analysis for FedEx, where they just don't want any one contractor who's in a terminal to be so large that they can essentially blackmail or threaten a terminal by threatening to withhold service. But more importantly, they also don't want it so that if someone is so large that if they were to struggle or fail on a day, that the whole terminal would fail because there's such a large percentage of the terminal. So scale has always been kind of a way for FedEx to set a risk ceiling. We don't want anybody above this percentage. And importantly, this scale limit is at the terminal level. So that's why I keep saying the terminal level. If you're thinking about, I want to grow, I want to enter this business and continue to grow and keep getting larger, it's perfectly fine. You can get up to scale at every terminal in the country. That limit is only at the scale level. And that's for P&D. Let me be clear. There is a scale limit as well for line haul. It just works a little bit differently. So it's at the district level for line haul. So if you've ever seen a map of all the terminals that FedEx has, basically there's terminals across the country, and they have the country divided up into 26 different districts. And that's how it's organized. And for line haul, scale applies where you can be up to 15 runs in a particular district. And so when you grow up above 15 runs, you have to move on to the next district. That's how the scale limit applies there. So again, at the beginning, I said, when I'm talking about scale and trying to help you understand it, it applies to two things. And so the first is that scale limit. That's kind of the first part of it to understand. But there's also kind of a scale minimum. And the reason for this is that FedEx has a minimum that they don't want anyone to be too small. So if you think about it, if you're so small, where you're only a few routes, then your margins are smaller for one. It also means you've got fewer economies of scale, and you have to be more of kind of an on-the-ground operator instead of a business owner. So if it's too small, there's a lot of things you can't really justify from a margin perspective. Particularly, you can't really have a BC or a manager. So the owner kind of has to be the person fulfilling all of those responsibilities and on the ground and operating. And FedEx really wants to get away from that model. They want you to be involved in the business for sure, but they want you to be available and able to address kind of the larger concerns. So things like your safety and your service and contingency. They don't want your primary concern to be an individual route that you have to drive because you can't afford a manager. So for P&D, when we think about the minimum, previously it was around 500 stops a day. It varied a little bit, but that's about the size. So about 5 routes was about the smallest you could be in most areas. For line haul, the minimum is 2 runs. So for line haul, you can think about it. They don't want any individual operator who only has 1 run. So they basically own the truck, they run it themselves, and that's their only run. Again, they want you to be more of someone who can run the business, not just, be the operator of the vehicle. So scale has always varied a little bit, terminal to terminal, but this is the tool that FedEx uses when they're trying to push contractors to kind of hit an ideal size, the right size business that they want you to be. And in the past few years, in particularly, scale has really been a tool that FedEx has been wielding to shrink the size of contractors. And if you've been around the last year or so, you will definitely have experienced that and seen it, that in a lot of cases, FedEx was reducing the scale limit at the terminal level and pushing contractors to reduce size. We saw tons of different transactions over the past couple of years that were halted because FedEx basically deemed it too risky for a new contractor to come in at that size. And so that's why you've seen so many different carve-outs over the last couple of years where, basically we've had to carve off pieces of territory and sell it because the overall business was too large and FedEx wouldn't approve the scale. And in a lot of ways, this was kind of a way for FedEx to combat the staggering growth that we saw come out of COVID. So they were okay with the fact that some of the contractors had grown above scale, but it was an issue trying to, transfer something that large to a new buyer. So when I was, anytime we've talked about scale the last couple of years, it's more so been a warning that, hey, pay attention. As you get above the scale limit, it starts to be a challenge where they won't approve sales. They'll put more pressure on you. So you don't want to get too large. So that's really been the conversation for the last couple of years when we talk about scale. But today there's a little bit of a different reality. So part of what FedEx has realized over the last year or more is that contractors need to be allowed to grow a little bit larger. And that's one of the ways they've reacted and responded to some of the complaints that we and other contractors have brought forward. And so as you continue to grow and scale, it can really help improve your margins as you start to run and operate your business more effectively at the terminal level. So what we've seen this year is that we have seen a significant relaxing in that scale limit, where previously, if there was a scenario where, I would start to get worried or expect FedEx to come in and halt or at least be cautious on any kind of transfer that was even 10% of a terminal. But we've seen deals this year in the 20%, 30%, even 40% range, and still go through successfully. It's not going to go that high at every terminal. There's going to be variance, but there has been a huge difference in seeing what terminals will and won't approve. And so what that means, if you're a contractor, if you're thinking about or currently selling your business, you're going to be able to do it in just one transaction and list that entire business most of the time. So you'll get to avoid a lot of the extended timelines that can come from, if you're trying to exit and thinking about how do I retire, get out of the business. It often recently has been kind of a multi-step process where you've had to have a few different carve-outs, find a few different buyers to make that exit in chunks. But in a lot of cases, we've seen this be something where you can sell the whole business, get it approved to one buyer. And the good thing for both you and buyers is that if you're selling the whole business, it makes, the financials cleaner. You're going to have the history and tax returns on a whole business instead of having to split it up. And that also makes banks happier. So it opens up financing possibilities and really speeds up the process and makes things significantly simpler. But even if you're not selling, it's still really important to understand how these scale limits are changing, because that means that basically you don't have to be as worried about continuing to grow at your terminal. You also may have more opportunities where maybe there's another contractor trying to get rid of or sell or just downsize a little bit, sell a zip code at the terminal. That's going to be hard for them to do right now, but and it may have been something that you'd be interested in, but it would put you over the scale limit previously. But now you can pick up those types of territories, you can pick up contingency, and even put you in a place where you've grown, but because the scale limits are relaxing, it's not going to be any real pressure from the FedEx terminal. You aren't going to have to shrink again. So that's all great news from a growth perspective, from an exit perspective, really speeds things up and makes things simpler. Now, the other side of the scale conversation is that the limit is relaxing, but the minimum scale has also begun to increase. And again, as we all know, it's going to vary a little bit terminal to terminal. There's not a hard and fast rule yet. But what I would tell you is if you're thinking about am I too small? If you are currently below about 1,000 stops a day, or if you're in that 5 to 8 route range, you're in the territory where FedEx is going to start to push you to expand in the coming months and year. So that is around the range we're starting to see that minimum shift. And some places are moving faster than others. We're seeing that terminal push for expansion come in a few different flavors. Some people get an update from the terminal on what the new scale minimum is and are told that they need to find a way to increase in size over the next couple of years. Some get told to consider selling to another contractor at the terminal in the next couple of months and years. The biggest risk factor, though, the thing that I want you to hear and be thinking about, if you are in that size range that I just mentioned, that 5 to 8 route range, and you are in a bronze metal category or even silver trending bronze, that can be the area where you're at risk. Those are most likely the contracts that FedEx is really thinking about, and that'll be thinking about targeting first and push for you to either find a way to grow or sell. So it is a good exercise for any of you that are in that smaller size range, that smaller size bracket, and in kind of the bronze or trending bronze direction on the metals side, to find out what minimum scale is at your terminal. And then start planning for ways to either, is there a growth path for me? Or I need to start thinking about my exit ramp. And again, the exit ramp is easier, but at the same time, I don't want you to be surprised by that at the finish line if you're not thinking about it. So the exit ramp might include, it might have to be selling to another contractor at the same terminal. And a lot of times we can help with that too. We have a lot of contacts. If you don't know the right contractor at the terminal, we can help with that too. But that's the kind of thought process I want you to start to be thinking about. There's two sides of this scale story. I want everyone to know about the potential for growing larger and selling your business all in one go. That exit ramp is not as chunky as it used to be, and that's a definite positive. That's great. And larger contracts, again, are typically more profitable with more breathing room and the ability to pay for management, mechanics, things that let you add efficiency to the business and step back from owning every responsibility yourself. But when it comes to these smaller contracts, it's really important that you are aware, first off, of these new scale minimums, and then make sure you have a plan around it. That's, at the end of the day, the most important thing you can do as an owner in this business, as an AO, is that you need to be contingency planning and you need to be thinking about the potential, challenges that could come to your business. So I'm sure if there are more questions on this in the Q&A, we can get to it. Or if it needs to be kind of an individual offline basis, feel free to reach out to our team and we can talk through all of those things at the individual level. I will, as a quick aside, say, most of these kind of scale changes are on the P&D side. Right now, line haul scale limits haven't, formally adjusted, but there are, rumors, conversations about those relaxing in the near future too. So we'll keep an eye on that. As always, we're going to continue to update you as these changes happen. Change is the constant with FedEx, and that's always going to be a part of this industry, is keeping up with those changes, being ready for them, and planning for them. But that is the main thing I wanted to update everyone on today. So Danny, we can go ahead and open it up for questions, but I will give everybody the reminder. If you were late coming into this, the question of the day is, what is your favorite ice cream flavor? So when you're sending in your questions to the Q&A, make sure you also answer that question of ours first. So before we get to the Q&A, Danny, do you want to answer the ice cream flavor question first?
Oh yeah, I'd be happy to. Actually, the wife and I took the kids up to the square in Murfreesboro yesterday, and we got some ice cream there. And I've got a new flavor that I think is my favorite. It was a strawberry cheesecake ice cream. So it was like strawberry vanilla ice cream with chunks of cheesecake in it, and it was absolutely perfect. Strawberry ice cream has always been one of my favorite, but adding the cheesecake to it, just chef's kiss, takes it to another level. How about you, Josh? What's your favorite?
Yeah, I mean, I would agree with you. Cheesecake ice cream, like that always works for me. I like my flavor combinations. So for me, I like chocolate, but chocolate's always too much. So I like the combination of dark chocolate and raspberry. And so those two together are like my ideal if I have a bowl of ice cream and have both of them. A little bit on each scoop, or each spoonful, that's perfect for me. So that's my ideal. Yeah.
That's fantastic. Yeah, my wife got banana pudding flavored ice cream, and that with the strawberry cheesecake, another combination made in heaven. Both things great on their own, but together, just another level. Yeah. All right, let's see what kind of questions we have popping in here. Guys, feel free to put as many into that Q&A tab as you can. We'll get to everything that we can in the time allotted. Even though Mr. or Mrs. Anonymous attendee didn't answer the question of the day, they asked something that I think we should touch on just really quick. They said, besides a few test cities like Minneapolis, what is going on with integration of FedEx Express? And I will say, Mr. and Mrs. Anonymous, real quick, this is something that we're going to dive into heavily at the Expo. So make sure that you are going to be live with us at the Expo. Register for that. We're going to have specific content for that there. And we do have a couple of things that we've put out on our YouTube channel in previous webinars. But Josh, what do you have to add there?
Yeah, the main thing I would say as far as Express is concerned for right now, they have the test markets. They are continuing to roll it out in a continued waves. So we'll update you as things happen. But I would say for sure, if you have questions about Express, come to the expo. We'll answer everything. We've got more to talk about, but that's where I would point you to for deep dive answers on everything you might have there.
Beautiful, beautiful. All right, Andrew Lusson. His favorite ice cream is Bunny Tracks. Haven't tried that one, but it sounds interesting. He says, looking to buy another route in my terminal soon. I currently have a rural area and buying an urban area. Any hints and tips as to why they offer one contract to combine the two areas so that I can make sure I'm at the same profit margin or greater with my growing footprint?
Yeah. So one thing, the way that they're going to structure it, they're almost certainly going to be looking at taking kind of an average expense level between the rural and urban. So basically what that's going to come down to is if you knew what the urban territories contract is right now, you're going to end up getting paid probably a little bit more than what they are per stop and, across certain rates. Whereas if you're looking at a per stop basis, your rural routes are probably going to get paid a little less on average. But in theory, that all comes out to being, similar or better for you from a contract basis. What I would tell you, as much as you can, it depends on kind of what the relationship looks like and what you can and can't get, but as much information as you can get on how that urban territory is being paid right now, what the current rates are for that contractor, and knowing what that looks like. And so that you can start to, one, get a sense of what the rates might look like when they try to combine them. And two, make sure you know that so that you can give appropriate pushback if you see or think that the rates didn't accurately account for everything. Another thing I tell you to be aware of, with combining contracts like this, try to think about any unique characteristics of your territory and anything you might know about the urban territory and send that in to the negotiator, to the engineering team as soon as possible. And that might be something that they can apply as well when they're looking at contracting and calculating the rates. But the best thing I would tell you is try to get as much information as you can from the current contractor running the new territory so that you can know what the rates should be and make sure that that kind of lines up with what you end up seeing.
Good stuff. Good stuff. Another thing on adding to territories that's come up in a couple of deals I've worked on recently is when the new area that you're adding to your current CSA is not contiguous with your current operating base. Sometimes that can cause an issue with negotiations, and we may need to be a little bit more creative on how we structure the officer category for that one. So feel free to reach out to us with more questions about that as you get down the closing timeline. We'd be happy to help with anything we can there. Another anonymous favorite ice cream is cookies and cream. Hard to go wrong with a classic like that. They ask, do you know offhand what part of the contract it states where FedEx can change the scale number and it allowing you to sell off?
Yeah, I don't know the exact point that they mention it in the contract. It might be one of those things that are kind of described, but they don't exactly say. I can go ahead and check for you exactly where it is in the contract, but I'll tell you, scale is always kind of a moving target, and it's always going to be a tool that FedEx uses to kind of approach the ideal size contractor. It's, again, at the end of the day, it's all business and risk analysis for FedEx. So for now, they're saying that, they want you to get larger. So that's where we are right now. It's all we can do is kind of deal and play in the sandbox we are given.
Copy that. Good stuff. All right. Next up is Chris Link. Ice cream for me is mint chocolate chip. Chris, I'm not going to hold it against you, but
I love mint chocolate. Yeah. So
man, it's like I'm eating toothpaste. Can't do it. All right. Says, I think I know you guys really well by now. Been watching all of your YouTube videos. Thanks for the information. No, Chris, thank you for tuning in. We love that, man. Yeah. In the process of purchasing FedEx routes here in Georgia, been doing my due diligence. My biggest issue is that this is a carve out, so I see no, quote, real numbers. What I mean by real numbers is the seller is giving me numbers he is inputting. I did ask him, can he send me revenue by zip code that I'm buying the FedEx, buying a FedEx report showing that the revenue for the specific zip codes. He tells me he has to break out by zips and routes, and he can't get me a FedEx report and total revenue for those routes. Is that true?
So yes and no. So what I'll tell you, what we do, we do carve outs all the time. So there's not a FedEx report that shows the revenue by zip code, but at the same time, there are ways that you can take the FedEx reports, that FedEx reports will show, I will say by zip code is difficult, but at the same time, we can show the number of stops and packages per zip code. And since that is what the contract is paid on ultimately, we can show you how many stops and packages are in each zip code. And so once we split that up, we can show you a report that comes from FedEx that shows all of that through something called Route Smart. And then from there, we can kind of do a calculation to go, one step further to show revenue. But basically, there is a portion of it that comes from FedEx directly. That is kind of the tracking of the stops and packages. There is some analysis that has to be done on top of that to get to the revenue per zip code. But it may also be that, like I can tell you for sure that we know what we're doing, and that's what there is an accurate analysis you can do for that. I can't tell you for sure that the numbers he's showing you are accurate or based on the correct reporting method, but there is a way to do it, is what I would say. But there's also not going to be something that is, a FedEx branded report that says each zip code makes this much revenue. So there's some analysis you have to do there.
Yep, and I'll echo one thing there, Chris. If you're not already a consulting client of ours, we have specific consulting programs where we can help you wade through those financials, carve out the P&Ls and the financial breakdowns for those, and really help you get to the bottom line on what you can expect based on the current contract. Obviously, when you split a CSA, you're going to get a new contract at stand up. So there'll be a little bit of speculation in there, but we can really help you zero in on some of those numbers that you're asking for there. Let's see. Next up, we have another anonymous attendee who likes Spumoni ice cream. I don't know what that is, but it sounds neat. Says, I came in late. Is there now a minimum size a contractor can be or has to be in order to sell their routes?
Yeah. So basically what I said is yes, and there's always been a minimum. It used to be around the 500 stop range, varies a little bit. That has increased. So it's not going to be that there's necessarily a hard number, but what I would tell you is if you are less than 1,000 stops a day across all your routes, or in that kind of 5 to 8 route range, is really about the size where I would be thinking that you're close to the minimum. So it's worth it if you're in that range and worried to talk to your terminal manager and verify what that minimum scale is at your terminal. So it's always going to vary a little bit terminal to terminal, but that's the range that if you're there is when you might want to double check and make sure that you're not below that minimum.
All right, good stuff. Next up, we have Wen Zhao. I hope I pronounced your name right, and I am so sorry if I didn't. Wen Zhao is also a fan of cookies and cream. We love it, man. All right, the bidding process and strategy when renewal comes up, question mark.
Yeah, so I'll just give a quick overview of what negotiation process looks like. I'm sure you might have more questions on that. If you want to reach out to us offline, if there's specific things you want to talk through about a negotiation, we can help there. But the way it works, I'll start with P&D. So the way it works with P&D is at the end of your contract, or usually a couple of months before the end of your contract, assuming you're still in good standing with FedEx, they will send you 3 options for your contract, where if all of the projections FedEx has done on a volume basis are perfectly correct, then each of those 3 options are the exact same revenue in the year. And basically the way it works is it's just a sliding scale where the first option will have more of your compensation tied to the fixed charges. So things like your service charge that's paid flat every week. Option 3 is going to have more of your compensation tied to the variable charges. So things like the per package and per stop rate. And then option 2 is just going to be kind of a compromise, a middle ground between those two. So like I said, if everything was perfect, if all of their projections are perfect, then each of the options are the same. Obviously, that's never going to be true. And so there's lots of strategies about how to handle it. You can accept one of those 3 options, or you can proceed to traditional negotiations where you'll go back and forth with the negotiator to come to a final agreement. So those are your options, and that's what the process typically looks like. If you have questions on that or want to review a particular conversation or negotiation you're going through, again, that's a whole 2-hour conversation. So if you have more things there, we can handle that offline, but that's just a general overview of how that process will work.
Absolutely. Those MESOs, that's MESO, multiple equivalent simultaneous offer. Whether or
That's
not they're
right.
actually equivalent, that remains to be seen, right?
Yeah, exactly.
All right. Another anonymous attendee says very intelligently, when I enter an ice cream shop, I ask them to give me 2 scoops of the ice cream with the most caramel in it. On a waffle cone, even better, man. That is my kind
I
of ice
love waffle
cream.
cones. Yeah.
That's it right there. I love that. And then there's no question attached to it. They're just sharing their love of ice cream, and that makes me happy.
I appreciate that. Yeah.
Next down, we have yet another anonymous who says Dolce de Leche by Haagen-Dazs. This is my wife's favorite ice cream.
Yeah,
So we're keeping good company here. Does the scale limit include express volume? Excellent question.
Right now, no. I'd say when you're thinking about express and scale, both of these are changes happening in near real time. So a lot of that's not finalized. And I'm sure it's, something at the corporate level that they're thinking about and trying to decide. I'd imagine at a certain point it will be, and that will be something that'll play into scale. But when we're talking scale maximums, that's something that's been pretty relaxed. So it's not really going to have they're basically just going to allow you to add that express volume and not worry about it. In theory too, let's say, express comes to a terminal. If everyone gets a similar level of express, then no one's percentage of the terminal should really change much. So even though express is added, it shouldn't hugely impact the percentage of the terminal that you grow or shrink. So it shouldn't have a huge impact. But like I'd say, right now, both of those are kind of influx new things. So changes could come to that. But I'd say, yes, they take it into account, but your scale shouldn't really change much, regardless of the express volume that comes.
So there should be a pretty equitable split of that express volume across all contractors in the terminal, essentially.
It should be close, or at least close enough where your scale doesn't change a ton.
Excellent. I scrolled down and I think I found the question attached to the double scoop of caramel on waffle cone from the anonymous attendee. So we're going to jump to that one real quick. Question is, in locations that FedEx Express has integrated into terminals, how are they pricing the express business? Is there a new layer of pricing, or does it roll into your current ground prices with, quote, more volume?
So right now it's a combination. And again, these are still test markets. Things can change, but we're seeing one, yes, it grows in your current volume. You're paid at those rates. There does appear to be an additional incentive as well, tied to hitting service thresholds specifically for your express packages. So essentially a bonus, assuming you can stay above a certain service threshold for the week for exclusively your express deliveries that are time sensitive. So that's the way it is right now. So normal pay, more volume, plus an additional incentive is what we're currently seeing, at least.
Yeah, that's exactly what we're seeing. That's good stuff there. Guys, great question so far. Keep them rolling in. We've got a little while left to go. Alfred Williams, grape nut ice cream. This is a new one to me as well. There's ice cream out here that I have just not experienced. I need to open the coffers up. Grape nut, like the cereal, I guess. I like grape nuts. I really do, but I like it with milk. So I guess with ice cream would be, look at Josh, he's Googling it right now.
Yeah, that's exactly what I'm doing right now.
No, that's fantastic.
Yeah.
All right. So Alfred is saying, when taking over a business that was remotely owned, how much time should the new owner spend on site daily before allowing managers to take over again? What are the biggest pros and cons? This is something that we run into a lot, Alfred. Josh, I'm going to take 2 seconds and before I let you jump in here. So when it comes to any sort of acquisition that you're making here, we always have a pretty firm recommendation that you're spending, 30 days or so with significant amount of time spent there in the terminal, getting to know your management, getting to know your team, your BCs, your drivers, really, baptizing yourself in everything that the job has to offer. But specifically when there's been a remote ownership before you take over the operation and with you intending to engage in remote ownership, really, implanting yourself as the head of that company, as the AO, and the person who's going to take charge of some of what I'm assuming are a couple of problems there is very, very important. So that 30-day threshold has been my traditional recommendation. I think it provides you with enough time to really get your head wrapped around all the different drivers, the ebbs and flows of the week, the slow time on the weekends, the busy time on Friday and Monday, or what have you, And that's going to give you the opportunity to see how your BC reacts to some of the problems that may come up. And then that's going to be the first point of emphasis where you should really, really put some of your efforts into, is making sure that the way that the BC is reacting to what pops up in the FedEx ecosystem. And we know that there can be several things that pop up here and there. You want to make sure that the way that they're going to manage that when you're not around is going to echo the way that you would want it to be managed throughout the entirety of your ownership there.
Yeah, that's exactly what I'd say. Is it's a lot. Really, you want to spend enough time where you can identify what was going well and what wasn't, and also just make sure like what were the BCs handling entirely. Like, were the managers accurately doing everything already, or were there just areas that no one did anything? And around safety, maybe there was no one focused on safety, or certain areas that could have been an owner responsibility, could have been a BC responsibility, but actually nobody was doing. So there could be areas like that for you to find, but the more time you can spend early on, one, building, trust and rapport, but also exactly like Danny's saying, making sure that you help to set a new culture for what you want things to be like, and that you can trust the BCs to kind of, enforce and propagate that culture, the better off you'll be. I wouldn't say that you're, if the business is being run efficiently already and is being done remotely, it could be that you're stepping into something that's very easy to run, and maybe you don't change anything. Maybe you just leave that and you're operating, but things are pretty easy for you. It could be also that it's run efficiently and well, but there are rooms to improve margins, but it's just something that no one would have noticed until you kind of got in there. So as long as the business looks good and you're paying a good price for it, as the way it is right now, if it's an absentee owner, like I don't view that as really a pro or con. You're still buying the basis based on what it is. But really, no matter what, whether it's an absentee owner or not, you still want to spend some time early on understanding the business and helping to kind of put your mark on what you want this business to be, because it is your business now. It's not FedEx's business. It's not the previous owners. It's yours, and you have to own it and kind of create that culture yourself in a lot of ways.
That's perfect, man. All right. Francisco Matute says he likes vanilla, keeping it classic. I respect that. Yep. What's the difference with regular FedEx and FedEx Express? We can fly through this one pretty quick, Josh.
Yeah, I'll give an overview. We've got a couple webinars if you want to go back where I spent a long time explaining the differences. But just so you know, right now there are a couple of different branches within FedEx, and one of their biggest initiatives over the next couple of years is to consolidate all of it into one FedEx and reduce redundancies. So right now, FedEx Ground is all done by contractors. And then there's FedEx Express, which is still done and run by FedEx employees. So you may see trucks on the road that say FedEx Express and that say FedEx Ground. And right now, sometimes they're delivering to the same house or the same business in the same day. And so there's clearly like some efficiencies that need to be handled. And so a lot of what's happening right now is Express is beginning to roll into the Ground network slowly, and it's being done in phases over the next 18 months. So there's some test markets, there's some new markets that have spun up recently, and it continues to be a rollout. But for contractors, the main things you're thinking about, one, understanding that there is volume coming, there's things to be aware of, and two, preparing for the different types of volume and how that can change your planning, things to be aware of. So again, a lot of what you're doing right now is kind of waiting to find out when Express is coming to you. And then, there's a ton more to talk about in terms of, the different strategies you can employ to handle this volume, still be efficient. They're all really small packages, mainly envelopes. So there's different things you can do for that type of volume than you might not be able to do for some of the packages and capacity and loads that you see in Ground. So lots of unique things you can do. And we'll talk about all of that at the expo in detail. But if you're looking for a recap, if you go back to our YouTube page, we have a full Express webinar from a couple of weeks ago.
Absolutely. Just make sure you're at the expo. That's where all the answers are going to be revealed. We have a lot of things cooking before that. It's going to be a grand old time. All right. Michael Moore, cookie dough ice cream. That's a good one too, man. You can't go wrong there. I'm a smaller contractor, 850 to 900 Tuesday to Friday. I have one zip code, 6 to 7% of scale. All the contractors around me are large. I wanted to sell, and I'm assuming the terminal, said I could not sell to outside buyers. But only one contractor was interested in buying me, and the offer was insulting. Any ideas? And what about a stock sale?
Yeah. So a couple of things I would point to. One, if, sometimes what I find is if you're purely talking to other contractors, their offer might be lower than what it's worth just because you may not have the right way to present the value. So we could, if you reach out to us, one thing we could help with is helping you get a true valuation and structuring how you can present the value and the price to other contractors at the terminal and the right data and way to show that. So that might be one strategy where we can help you try to find, a realistic buyer and price and offer at the terminal. If you're thinking a stock sale, so you could do a stock sale. The challenge is that contract is still below the minimum. So it doesn't really change what FedEx wants change, which is that you're too small. And so they want you to grow. So another possibility, assuming you're in good standing with FedEx, is seeing if there's any other contractors at the terminal that would be willing to sell you a zip code that would get you up above that minimum threshold. So that's what I would point to. I'd say a stock sale doesn't really solve the issue that FedEx is trying to solve. So I would go down the path of either letting us or someone help you better present the business to find a buyer at the terminal, or approaching other contractors. We may have contacts even at that terminal that you don't have to help you identify maybe a zip code or two that you can help add to your business by just one off of one of those larger contractors and get above that threshold.
Yeah, that's exactly what I was going to say. Sometimes you got to grow a little bit to be able to, get out if that's what you're looking to do there. Brian led with favorite ice cream, chocolate and peanut butter. The two greatest things in the world come together to make an even better thing. That's right. Are there any rumors on the minimum size and runs for line haul?
I have not heard any rumors on the minimum size. So it'll never go below 2. 2 is always going to be the minimum, but I haven't heard anything about an increase of that minimum. So if we do, I'll let you know. But as of right now, that appears to still be the same.
Yeah, that's been the case for some time. I don't see it changing anytime in the near future. Another question from the Carmel guy. This guy's going to be a legend in our chat. That's awesome. The question was, in locations that FedEx Express has integrated into terminals, how are they pricing the express business? Is there a new layer of pricing, or does it roll into the current ground pricings with more volume? I think we did touch on this one.
Yeah. There's just additional incentive around hitting your FedEx service thresholds.
That's exactly right. And then it looks like we have one more question. If you guys got any more, go ahead and throw them in. We've got a few more minutes, but we have another anonymous attendee, cherry chocolate chip. Yeah, anytime you put fruit and ice cream, it's a win for me. Hello, have y'all heard anything about FedEx operating 100 fewer terminals and 10% of P&D contractors?
No, and they're like I said, the express integration, there could always be the chance that maybe there's a couple of terminals that, as a part of the one FedEx consolidation, they decide to combine terminals or make some changes there. But the vast majority of these are going to be express is rolling into ground. So one-off situations may happen, but it appears to be that largely in just about every terminal we've seen, express is rolling into the ground network.
Yeah, that's exactly right. And with that being said, guys, I'm not seeing any more questions popping up, so we'll get ready to go ahead and sign off here. Last call for questions. In the meantime, just wanted to remind you guys, there was one other new listing that I didn't touch on at the beginning, so I'll just hit it here real quick for my peeps in Florida. It's a route out of Central Florida, 8 P&D routes listed at $750K. That's roughly 89.5% of revenue, running about 20.5% of EBITDA. There is a manager, a very desirable location in the Sunshine State. All the vehicles are 2020 and newer, which is a huge plus. The CSA is located in a suburban territory, only averaging about 113 miles a day. Significant growth being experienced there, and there is an option for assumable truck debt. So wanted to make sure I got to mention that before we let you guys go. I appreciate all of you for being here. We had a really great turnout today. Make sure you head over to the webinar chat. You can see the links there for the new investor summit we have coming up on Monday and Tuesday. We've got a couple of spots left open. We'd love to host you there. And of course, the registration and RSVP link for the expo, as well as the book your room link are there as well. Please make sure to hit that up. From everyone here at Route Consultant, thanks so much for being with us. Josh, thanks for being here. The content was great as always. And we'll see you guys next week, okay?
Perfect. Thanks, Danny. See you, everybody.